Welcome to the Dental Team Podcast. I'm your host, Kiera Dent, and I have this crazy idea that maybe I could combine a doctor and a team member's perspective because let's face it, dentistry can be a challenging profession with those two perspectives. I've been a dental assistant, treatment coordinator, scheduler, biller, office manager, regional manager, practice owner, and I have a team of traveling consultants where we have traveled to over 165 different offices coaching teams. Yep, we don't just understand you, we are you. Our mission is to positively impact the world of dental, and I believe that this podcast is the greatest way I can help elevate teams, grow VIP experiences, reduce stress, and create A-teams. Welcome to the Dental Team Podcast. Hello, Dental Team listeners. This is Kiera, and you guys, I am so excited to be welcoming this amazing guest. She actually is a CPA, and she does Profit First. So I'm super jazzed. You guys know I'm a huge fan of Mike McCallowicks and Profit First. And so when she emailed in to be a guest on the podcast, I said, yes, please, because I want to learn more. So I'm super excited to welcome Suzanne to our show. How are you, Miss Suzanne?
Hi, I'm doing great, Kiera. I'm glad to be here.
Good. Guys, true confession. I asked Suzanne to say her last name twice and I thought I had it. And then I panicked and paused and froze. So Suzanne, tell everyone what your last name is because you're just Suzanne right now. So I'm not going to botch it. People botch my name all the time and I panicked. I literally deer in the headlights. So Suzanne, tell us your last name.
It's Mariga, M-A-R-I-G-A, Susanne Mariga.
Perfect. And Suzanne, thanks for doing that, guys. I just have to call myself out. You know who I am. I'm a real human over here. Suzanne, tell us a little bit about your background, how you got into Profit First, how you became a CPA. Let's just kind of give the listeners a quick intro on you.
You know, I have been a CPA for over 20 years. My dad was a CPA. So I guess I can start to say, I'm starting to come from a long line of CPAs. I worked for my dad when I was 14. He hired me, just like many entrepreneurs hired our kids to give them great work experience. It was a great write-off for him. And it kind of stuck. And so I became a CPA later on. And, I'm so excited today that we're talking about Profit First because, it's absolutely one of my favorite topics in the world. Like many entrepreneurs, when I finally started my own firm and decided to go off on my own, I did what I loved. And that was accounting and taxation for me, just like dentists for a lot of your clients.
Yeah.
And it was interesting because when we do what we love and we're just serving and we're just so excited to serve and we never think about what we want, what the end game is. And even though I knew profit, right, I knew generally accepted accounting principles, I didn't really focus on the profit. I focused on client delivery. I focused on sales. I focused on pricing. I focused on building the business credit. And I never focused on the bottom line. And interesting enough was, at the end of 3 years of running my own firm, I found that I had nothing to show for it, no profits, starting to accumulate that credit card debt. And I was like, this has got to change because it was so many hours and definitely it wasn't the long game, right? For where I wanted to be 20 years later. And so, when I heard about Mike McCallowicks' concept of Profit First, the concept of paying yourself first, I said, you know what, that's exactly what I need. And I have been a diehard brand ever since.
I love it. And I love meeting CPAs. I literally just did a podcast the other day where a listener had emailed in and said, how do you have checks and balances for your CPA? And I was like, well, I'm no CPA. I'll tell you what I do. But the reality is I like CPAs. I like to learn. I like the podcast to learn more because at the end of the day, my specialty is teams and systems in dentistry. And that's what I do really, really well. You, Suzanne, do the numbers really well. And like you, my first year running the business, I was like, this is stupid. If I'm going to work this hard and get paid less than I could as a part-time Starbucks barista, and I'm never home, I'm gone almost, I was going to say 400 days a year because that's really what it felt like more days than it even has in the year. I was like, there's just got to be a better way to do it. And that's honestly, I remember I was driving to an office in New Hampshire and listening to Profit First. And he said, when you're ready to draw a line in the sand, email me. And I literally on my phone, emailed him, I'm drawing the line in the sand. And I felt like my life was never the same. So Suzanne, walk us through, since you are a CPA, I think when I try and help offices set up Profit First, and again, this is Kiera's version. I've had Mike speak at our events before. I fangirl over that man like crazy. I will one day meet him in person. I'm committed to it. But at the same time, I don't feel like I'm an expert forward. I feel like I'm still learning. So kind of walk us through what this profit first is and how you set it up, because so many CPAs don't understand how to do profit first. I personally, and I'm going to say this with the most respect, I think some CPAs are so dumb because they tell me, Kiera, you have money in your bank account, when I'm like, I don't freaking have money in my bank account. Like, you tell me my balance sheet, like massive air quotes balance sheet, is correct, but I'm like, where the heck is the money? And that's why I liked Mike's approach, was because I felt like, okay, finally someone gets it. And it's not this like retroactive, like, well, you should have money, or hey, it's great, you have like a better year, so congratulations, you owe more taxes. Like, me as the person living that feels very frustrated, even though accounting wise it makes sense. So I'm super excited to hear. So if you can kind of just walk us through, like, what is profit first, and then how do you apply it to real life business?
Oh yeah, I love Profit First, and I'm super excited because I hear that a lot of schools are teaching it too. Like some of the Ivy Leagues are teaching Profit First, and I think it's so cool that we're as a country embracing the idea of simple business, so that people aren't talking, gap speak, generally accepted accounting principle jargon, and it's interesting because first of all, I'm just going to clarify one thing. Profit First is a cash management system. So it's a cash management system that's designed to help you really manage the cash flow of your business. It's not an accounting system. A lot of accountants, you say, I love that Profit First accounting system. And immediately they're on defense, just like you said, Garrett. They're like, what gap are you talking about? What foreign language is that? But it's a cash management system. It's literally a system that's designed to manage your cash flow. And what I like about it is that it works with our natural human tendencies. So there's something called Parkinson's law. And what Parkinson's law says is that as humans, we're efficient. We're going to use as much as you give us. So I like Mike. He talks about toothpaste
Yep.
in his book. And, and that toothpaste is brand new. My husband is like squeezing it from the middle. He's squeezing at the end. He's squeezing from the front. I'm looking at like, why do you need to squeeze this toothpaste in so many different directions? But I let him go, I let him get away with it. It doesn't drive me crazy. And then when we get TDN, right, and we're like rolling that tube up, and somebody's going to have to go to Walgreens soon to buy another tube, like I'm telling you, that's a scarce commodity in our house, right? And that's exactly how it is in business. When we have cash, when, they're handing out PPP loans and they're giving you EIDLs and they're giving you, what is that new one? The ERC credit, right? That's
Totally.
fun. Businesses are like soaking up that cash and they're like, you know what? I can keep these employees. I know there's a pandemic and, and I know that I got more overhead than I need right now, but it's a little bit okay. We got cash, but we'll be able to float this. Or, when the economy is good, they're like, Suzanne, you know what? It's time for an expansion. It's time for me to get a bigger space. And I don't really need it like yesterday, and we probably won't need it like until next year, like midway through the year, but it's right next door. We can just knock down the wall and sign the lease now before somebody else moves on, and I got to wait next 5 years to get the space available again. Or Suzanne, my favorite one is, hey, they've got this great training in Hawaii. You think I can go for a tax write-off? And again, it's Parkinson's law. It's working with our natural human tendency. The more we have of something, the more we're going to use and the less efficient we're going to be. And so what Profit First says is, that's how we treat our cash. We got a lot of cash and we just got paid and the bank is showing a lot. If that staff person goes, my computer constantly needs an update, you're like, okay, just order another one, right? Or, we need that new piece of equipment, right? It's cutting edge and we got the cash. Why not do this, right? And so what Profit First does is we create this illusion of scarcity. And I like that word illusion, almost like a magic trick, like we have less than what we really have. And so what happens with Profit First is you create that scarcity through bank accounts that have very, very defined purposes for those. So in Profit First, you get this one bank account. We call it the income account. Everything's coming into that income account. When that customer pays you, it gets deposited into the income account. And then what twice a month, what happens is we transfer to other bank accounts based upon their purpose. So Profit First, right? We got that profit account. We're going to fund that profit account first. So immediately day one, you are profitable. It's an intentional action. It's happened for you. As an owner, right? As a dentist, you need to get paid, right? You are working those hours, you are seeing those patients. And so we got to make sure that you have a salary for the work that you're doing. So we're going to fund the owner's pay account. Too many people ask me who's their most valued player on the team. And they say, whoever their office manager is, they say whoever their favorite staff person is, but they never say themselves. And it's interesting because the day you step out and you take that license with you, that practice closes. You are the main person. And so we need to celebrate that. We also need to reserve for taxes, because if you're profitable and you've got owner's pay, congratulations, you're going to have tax too. That's that other side of success. So we want to reserve for that. And then everything that's left over after you fund your profit, your owner's pay, your tax is left over for operating expenses. And that's all you have. That's all you have. And that's where you're going to have to make those decisions of, do I really have the money to be able to afford that new office space next door? Do I really have that money to go buy another computer? Or do I just want to take it to get repairs real quick? Or even better yet, just wipe it, right? And restart it all over again. And so that OpEx account is really creating that illusion of scarcity. I don't have that much cash because I have an obligation to pay my profit, my owner's pay, and then my tax before I can spend on other things within the business.
Which I love. And I will say it's funny because my CPAs aren't profit first wizards, if you will. And so I've set it up on my own. And it's funny because I was just talking to them and I said, Jill, because we were both like, I sweat bullets on that operating account. Like I literally get stressed out of my mind because it's so low, because I pull every single thing. Like I squeeze that thing like a tube of toothpaste. And in my mind, like, do I know I have other accounts? The answer is yes. However, when I see my op account sitting pretty low, we sweat bullets. And it's like, okay, I'm not going to pay that right now. I'm going to look for different ways to do it. We had a ghostwriter that was coming through and they wanted to ACH me on the invoice. And I was like, hard pass. No, we're going to put on the credit card because I can't have that much money coming out of my account. We had another sponsor thing coming through. Do I have the cash? The answer is, in quotes, yes, if I had to, but I'm not willing to pull from that profit, that owner, my taxes. I have an emergency fund. To me, those are just non-negotiable standards that I have. So I literally have to get, like you said, it's like that tube of toothpaste at the very end. Like you were squeezing it out. I make smarter decisions. I don't say yes to everything because it's not this big pile of money that hasn't been accounted for. So I'm curious, Suzanne, what is typical? Like how much should be going into profit? How much should be going into owner's comp? Because dentists get paid kind of funny. Like they are dentists, but they're owners. And then there's profit. So it's kind of this weird thing. I do the same thing in my company. So how do you even like set this up?
So I'm going to send you a gift, Kiera, after this. I'm going to send you a chart that you can share with your listeners so they can access it. But it really depends on the size of the business. And I say that because, when a business is really small and it's got like less than $250,000 in revenue, it's practically a one-man show, right? It's practically a dentist. He might have a front desk receptionist, a part-time assistant that may be helping him, but it's a very small practice. And so we expect to see about 70% of that revenue go towards the owner, right? In that case. Now, as the business gets bigger, right, and it starts to rely more on employees, and the dentist is more stepping into a CEO role where maybe other people are doing more of the work for him. He might have another dentist, he might have hygienists working under him, and let's say he's a $10 million office now. His owner's pay is very insignificant compared to the revenue as a whole, because now he's really relying on the power of his team. And so those percentage allocations change drastically too. And now those operating expenses may be about 65% versus 30% when he first started, simply because he's relying on the power of his team versus him doing everything. So it kind of grows with you. And I will go ahead and share that chart with you so that you can share that with your listeners with that.
Are you guys sick of trying to figure it out on your own? I know I am. When I'm trying to run a business, sometimes I just think like there's got to be a better way to do this. And so for me, my answer has been to find someone who's done it and does it really, really, really well. Like I'm talking the best of the best of the best. I want someone who's been in my shoes, somebody who understands what I'm going through. When I was looking for the consulting business, I found a coach who literally has run a consulting business. Well, that seems like the perfect fit. So you guys, right now, we have a few spaces open in our Platinum Consulting. That is in the consulting where we actually come to your practice. We help you get systems implemented. We don't just tell you what systems to implement. We actually implement them with you and for you. You guys, it is one of the best investments I've ever made is to hire a coach who understands the business I'm in, who's lived it, who's done it. And that's what we in the Dental team do. We literally physically fly to you. So if you're sick of trying to figure it out on your own, if you just want somebody who understands you, join our Platinum. I'd love to have you. I'd love to have our consulting team come out and see you, be in your office, be with your team, and truly help you get onto the easy path of dentistry. It doesn't have to be hard. So join us in the Platinum. We'd love to have you. Fantastic, which I appreciate a ton because you're right. It does change and it does shift. And I do feel like dentists, they usually start out as that one-man band. And I remember when I first processed like 50K, I was like, holy cow, that was like the best day ever. And then you get bigger and bigger and bigger and you realize that your profit is different, your pay is different. And so what I've heard, and Suzanne, I'm curious if you can like confirm, but again, healthy, thriving practices. I'm talking the ones that are producing over $1 million, collecting over $1 million. I try to keep them at a 50% overhead. So there should be a gross profit. And that's before owner compensation. So a gross profit of 50%. Owner's comp usually at 30% because that's typically what doctors are paid. And then a 20% profit margin within. I like that 20% profit margin. I get that as you get bigger and you get into the multiples and things like that, that profit is going to change. Is that typical? Am I kind of on, off? Like that's kind of what I've heard and that's what we've coached on. But have you seen differences? Again, after they hit that million, I know when you hit your 10 million, your DSOs, much larger practices, it's very different. But is that pretty standard to have something at least in that realm, or is that completely off base?
No, it's very realistic. We typically see once you hit $1 million that you're probably at that 50% owner's benefit. And when I say owner's benefit, I'm talking about the profit, the owner's pay, and the tax combined. And then 50% that's really going towards that operating expense account. Mm-hmm. So that's very, very, very common with Got that. It.
Cool. So I think if someone's wanting to start, how do you even start? Like, what do you say to clients? I mean, I read the book and he's like, go open up a bank account. And I can't tell you how many clients I've had where I'm like, all right, let's open the bank. And that feels like the hardest task to even get them to open these extra accounts. So Suzanne, how do you start? Like if someone wants to get kicked off on Profit First, how do you get clients to sign up and to start on this process? Because again, I mean, I think there's a motivating factor of I'm profitable on day one. That already feels good. But how do you even start?
I love that Mark Twain. Not going to quote it exactly, but if you have to eat a frog, eat it first thing in the morning. If you got to eat 2 frogs, eat the biggest one first. And it really is about, you just have to just start. You have to eat the frog. That's really how it works. And you're right, Kiera, one of the hardest parts about Profit First is just getting started. I hear people tell me about the anxiety that they feel like when their banker's going to look at them with like, are you okay? You need to start 5 bank accounts. Is that necessary? Or the accountant that doesn't want to reconcile 5 bank accounts. I hear the stories all the time, but at the end of the day, it's physics, right? It's physics. If I move $1 over to a bank account and I don't touch it, right? And the next time I move another dollar over it, it's going to accumulate. They're going to accumulate and it's going to grow. It's simply physics, right? And so you cannot lose on the Profit First method, but how you lose is just by not getting started. A lot of people say, I don't have enough from the minimum balance. I'm going to get fees. I don't want to pay fees. I said, what, you're losing more on the opportunity costs, from just not getting started. Don't worry about the fees. You will eventually cover that minimum balance in that bank account and you will grow beyond it. So it's more important to get started. There's some banks that offer free accounts. We're not affiliated with them, but I know Profit First does have a BB&T or SunTrust for some, if they have a branch in your area. They do have a Profit First banker. So they are familiar with those accounts. But again, don't let free accounts stop you from getting started.
Amen. And honestly, like you said, I've done it. I've set up all my accounts and it's crazy how quickly it accumulates when you just start moving them. So Suzanne, I actually wanted to kind of pivot on the same line because we're talking about Profit First and you had actually listed a topic for today of how you can actually increase strategies for increasing business profits. So I felt like that would be a good okay, so we've talked about Profit First. We've talked about what it is. There are CPAs out there and guess what? My CPA definitely gave me the eyeballs of like, Kiera, you want how many accounts and how many accounts do you need? And guys, I like move money through all these accounts every single month. And yes, is it kind of a pain? The answer is yes, but the payoff is crazy. I mean, the things I've been able to do, the security I've had with my business, the security I've had with hiring new people, of having those slush funds behind, and I know exactly what they're accounting for, to be a better tax. Like, I cry every year when my CPA calls me for my taxes, and you guys, I'm like a little squirrel, and I've got 5 acorns for taxes because I'm so scared that they're going to tell me I owe more than what I was planning, and it terrifies me. So to have that peace of mind that I've been saving consistently on a consistent basis alleviates a lot of that stress. So, Suzanne, how can we actually increase those profits so we can have more profits in the business? Because at the end of the day, that's what we're going for anyway. For me, I feel like one of the benefits, the success tax of running a business, is to be profitable and to live a life that I design, rather than one that's being designed for me. So that's a huge motivator, and I think business owners should. So how can we? What are some of the things you've seen to increase those profits in a business?
So I like to start with the low hanging fruit, right? Those easy wins, those easy victories. And I would say start with reviewing your financial statements, especially that profit and loss, that is those expense items. And I really like a lot of the softwares because they actually allow you to sort them. They allow you to sort your expenses from the highest to the lowest and start with the lowest. I remember I walked into my office during COVID, and first thing I saw was all these magazines stacked on top of each other. And I looked at the office and nobody was there. And except for the receptionist that was like stacking them on top of each other. And the reason why people were meeting us on Zoom. And so the first thing that was easy to cut was those magazine subscriptions. Look at those memberships that you're not going to. So if some of you guys are members of those chamber of commerce, are you really still going to those meetings? Are you still shaking hands right now? And if you haven't been to a meeting for a while, or it's on your calendar as I friend to, I met to, I will one day, maybe that's a great expense to cut too. So looking at those things that you can, what can you consolidate? I know one of the things that our firm has recently done was, and I am sorry to affect the prices of Zoom stock, but we realized that, do we really need all these subscriptions of Zoom? And we have Teams, we have Microsoft. Why not we just use Microsoft Teams and meet with our clients that way versus over Zoom? And immediately we were able to cut $150 per subscription from doing that. So looking at those overlaps, looking at those things that you don't use, if you don't have financial statements that are ready to go, start with a credit card statement, start with the bank statement, and just start looking at the line items. What am I using and paying for that I really don't need? I love your idea, Kiera. When you're starting to see those auto debits coming out, stopping the auto debit. No, you want to be in control of your account, right? You want to make decisions every single month as you're writing that check. Do I really need that? Can I live without that expense? Sleep on it for 48 hours before you sign that contract with that. The other thing is tax strategy. Too many accountants will go out and tell their people, at the end of the year, oh, you got a lot of taxes, you better go buy that truck, and your dentist office, like, why do you need a big old truck for, even if you are going to get a tax write-off, why do you need the big old truck? Instead, look at strategy. One of the things that's important to you is keeping your employees, right? Because the longer we keep our employees, the better they get at their jobs, the more efficient they get, the more ideas they get, the better your practice gets, right? And at the same time, you want to build wealth, right? So maybe a 401k, but not just any 401k. Let's make it a 401k that you have to work to vest on that. You got to be your 6 years of even able to vest in that program. So if you leave me after year 1 or year 2, well, you forfeit your contributions, or the employer contributions. And it goes back into the trust, right? Which means if you're the last into standing, it's yours. In the meantime, you're getting a tax deduction. You're building your own nest egg for retirement, but you're paying less in taxes. So that's another great thing. So look at opportunities to increase your wealth without increasing your expenses while reducing your taxes. So those are just some things that I like to do in order to lower those taxes and increase those profits.
Which I really like that you said that. I know for me, I did a podcast the other day about the power of cadences. And for me, it's every quarter. I run on traction as well. So between Profit First and Traction, those are kind of my main shebangs. But I have it every quarter when I run a quarterly meeting. That's when I review my entire P&L. So like every transaction that's hit in those last quarters, really line item that out. It's a total pain. And as the business gets bigger and bigger, I've got pages upon pages. But I think 1 hour to review and make sure the things that I'm actually spending money on are things I want to continue in the next quarter, that right there alone can be a great zone. I also hadn't thought about that 401k of having it be a long-term employee retention piece, where you can offer it, but it's not available right away, because agreed, you want people for the long haul. And what do you suggest on taxes? Because when I hear tax strategy, like, Suzanne, how can we as business owners know if somebody really does know tax strategy? Like, I like my CPA a lot. I don't know if he listens to the podcast, and if he does, like, he knows he's my brother. And I feel like sometimes he doesn't tell me the rules of taxes. I'm like, hey, you got to tell me the rules of the game so I can win. I like to win. But I feel like I don't know. I feel like tax strategy is such a hoopla because I don't know what like true strategy is. And how do I know if a CPA really does do strategy, or if it's just like you said, buying vehicles? I mean, shoot, I have definitely been at the car dealership on Christmas Eve, New Year's Eve. Like, I don't know what to buy. Like, why am I buying this? I don't actually need this. And so how do you figure out somebody who has true tax strategy? Because I have literally been told, hey, Kiera, you just need to plan to put away 50% of what you earn because you owe that in tax. And I feel like that is the stupidest, laziest advice I've ever been given, because I'm like, there's got to be something I can do. I don't mind paying taxes. I don't mind paying to be in this country that allows me to have the business I do, but I also don't want to be stupid at the same time. So how do we like find true strategy? How do we learn more? Like, what things do you suggest so we can be successful on our strategy?
Yeah, definitely. And first of all, it's understanding that tax preparation is different from tax planning. Tax preparation is just filling out a form at the end of the day. Everything is done. The year is closed. There's not much that anyone can do for you besides maybe contribute to an IRA. Um, and so tax planning is what you do throughout the year. So it's important, first of all, to have that relationship with your CPA. I know when we do tax planning, we usually have a relationship. We're meeting with our clients at least quarterly to see this is where you're at. This is what we're projecting that you owe. This is what you need to do in order to lower that. We create a tax plan where we actually take their tax returns and we analyze it and we go, there's some opportunities here if we change entities, because everybody goes, oh, an S corp is a great entity, but maybe not. Maybe it's not. If you're a new practice and you have financed that practice through debt and you don't have bases, well, guess what? If you got a loss that first year because you've got a whole lot of equipment that you've just purchased, you're not going to be able to deduct for that. And so maybe that S corp is not the best entity to be in. If you're high net worth, right, and you got an S corp, and I'm sorry, guys, you guys are what we call an SSTB. You're a specified service trade or business. You're a doctor, lawyer, dentist, and you get phased out of that nice, lovely QBI or qualified business income deduction of 20% once you hit, over 400,000. And so how do you get around that? Maybe a C corp might be a better option for you in that case. And being able to control your salary as well as different, like we talked about, the retirement vehicles, and really get strategic about that. So really it's connecting with a CPA that, one, do they do tax plans? Have they work with your friend? Is that something that they can help you with? Or is it more of a tax filler, form filler that you're getting at the end of the year? So use your gut feeling and then definitely look for someone that says they specialize in tax planning as well as the preparation.
Oh, Suzanne, that was some solid wisdom there, because I think we might get comfortable. And I'm a firm believer that I want always the best and I want to keep growing. And so I've heard a lot of my doctors be like, but Kiera, I've been with my CPA for years. They know me. I go to church with them. And I say, that's a real expensive church friend. You can still be friends. And I get that a CPA is a relationship. They're over your money. You've got to trust them, because I do agree that there is that relationship. I also think make sure you haven't outgrown your CPA. And if you feel like if you feel like you're paying higher taxes, it doesn't hurt to get a second opinion and just ask people. So, Suzanne, we've kind of gone through the gamut of profit first. What is it? How do you get started? And then talking about ways that we can increase those profits. And then also, how do you figure out tax strategy? So, Suzanne, I think a lot of people should reach out to you, because the fact that you do profit first as a CPA company, you do tax strategy, those are things. And then you also know the dental world. So 3 big key factors, because I think a lot of CPAs are just generalist, whereas dentistry is different, and certain things should not be happening in dentistry, and other things like the ERC, like the employee retention credit. I literally, guys, had a doctor, and I've told you guys, we have it. You should be applying. A doctor emailed me today and he said, Kiera, I'm going to get $615,000 back from ERCs. Like, That is, and I said, perfect. I paid for myself for the next 10 years. Like, you're welcome. That is crazy. Awesome. But I just feel like so many people don't execute. And so, Suzanne, for those people who are ready to execute, who say, hey, I'm tired of paying taxes, I want to set up profit first, this has been on my list for the last 5 years and I just haven't done it, how can they connect with you and see if they're a good fit with you, and vice versa?
So the best way is we actually teach Profit First for free. We have a free masterclass that we teach. If you go to Facebook and you type in Profit First Masterclass with, I'll say with Susanne Mariga, you will find that class. And we host them probably about quarterly. So
Cool.
definitely chime in for that. The Profit First Masterclass with Susanne Mariga. That's the best way. And feel free to DM me on any of my social media.
Cool. Awesome. Guys, I would totally go check that out. A lot of clients with us want to set it up, and don't worry. I mean, I go to these courses, I go to these master class. I'm going to join because I feel like I can keep getting better and better and better. So, Suzanne, it has been so fun to chat with you, and guys, truly reach out if you feel like Suzanne can help out. If you guys can be a part of that Profit First, I will say Profit First changed my business, and it changed my life, and it changed my stress. And so, having that freedom, I think, is worth the 1 to 2 hours it takes to set it up, and then the discipline every single month to transfer. So it's not hard. It's just something that does require discipline. But I have a sign in my house that says discipline equals freedom. And I think that freedom is worth every penny. So, Suzanne, thank you so much for being a part of our podcast today. I super appreciate you.
Thank you for having me.
Of course. All right, guys, go check her out. Like she said, join her on Facebook. And always, guys, just remember to take action. This is the time for you to be profitable and to be successful. And this isn't just for dentists. Team members, you can set up Profit First. I was not a business owner when I first started setting up Profit First. So all people can actually benefit from this. So guys, take action. And as always, thanks for listening. And I'll catch you next time on the Dental Team Podcast. And that wraps it up for another episode of the Dental Team Podcast. Thank you so much for listening, and we'll talk to you next time.